Welcome to TradeTheNBI.com. This is John's Reports for the 10th of September, and well, we came right to that 61% daily and supported right off of it, and then got above the ABM green for the close, and that has led to the impetus of this morning's little pop that's taking place as we've sort of seen decent steel rising, which is short-term buyers. We had finally less retraction from midterm buyers here in the green, and you can see we've not dipped below the red line, so it's not something that's been a distribution. We've been in what we would consider a gold candle above the 50%, which means we should be moving back towards the highs, which would be up that 29.17 range. Still in a negative checkout though, so we're just right in between. And again, this is where it makes it easy because we've got the ABM yellow at 92, and then the various other ones. We just moved above the magenta at 83. So it gives a good guideline from a daily standpoint. It's always important to look at those. From an NQ, much further, we went all the way to the 61%. That was the issue for breaking on the S&P. If we went below the 61, then we would go all the way down to the 76, we would go to 61. That was a much bigger range. NASDAQ still looks far weaker, but you do have the bullish cross of the steel over the orange, but you don't have, in order to make those snakes that I talked about, which would be the bullish one, this is the start of it, but typically you would want to have that cyan in the middle in between as sort of the tongue. We can see that we've had a far bigger distribution here in the NASDAQ. Clearly, I mean, when you see the difference between the dips below the red line and versus not. Euro, right at the very top edge of the range. Not a concern when you're still seeing these fantastic numbers for the economy, and that, again, it bodes well, which also bodes for rate hikes and bigger deficits, so double whammy. And in this particular case, we still expect a 113 move all the way down for TLT, which is treasuries and that. So it's all built into it. The fact that oil is keeping at the high end of the range, but not really breaking out into anything. A little bit of softening there would actually be a spur even more to the economy. And gold has not caught anything because oil's been that interim trade. However, you can see huge improvement from a shakeout standpoint. This has just been a solid accumulation here at the base. And then we start to look for these higher moves of the DOC red into the negative 13.5 zone. We ended up with a dip right here with the orange below, and got to see the green move across before that. And we've not had any reset of the steel, which would really be the thing that you would want to see for a push. Oof, it's a busy chart for what was Friday's action. And we started off weak in between, and we ended up with a couple of these nice little signals. I call this the little start of a short snake that I prefer. Prefer a little bit more where you have the green directly crossing at the same time you're getting that steel dip. But the green did cross below the red. Cyan crosses into the middle of the short snake, so that tongue that we just don't see yet on the S&P, but clearly saw it right here as this orange breaks above. In fact, I'm just going to increase the size of the DOC since it's worth really taking a look at what's taking place at this point. And that led to a nice breakdown. And again, it becomes easy to follow at that point because you can follow the short algo going in. And then we ended up with gold below, and in this particular case, it was still pretty weak because at that point we were right about here. It had a slightly bullish move of the steel, but again, the tongue wasn't in the middle of it. And it wasn't until you get the bullish version of a snake right here as we were making the final lows, but you needed a reset of the orange going below red. And this becomes an interesting one because what I look for in this is that you've got to see that orange stay below the green. And this is a powerful one if you're going to follow long setups on that. Great to see it break into a new zone, but I would consider this one was just pretty short-lived. I mean, literally to right about there from the initial dip, so really not a whole lot of anything. But then you're at a much higher pivot of the red, and you get the same dip going right about there. takes a bar or so, and then boom, starts to really take off above the 23% as it makes another one. And that took off, got above the 50. It's a complicated one in this one because this is really back and forth, because when I see that orange cross above green, it's usually an end to a long setup, and that's why we saw such back and forth on this. So this was a bit more of a tough one. The shakeout was a little cleaner for following that guideline, but then above the 50%. Ended up getting gold candle, which suggests the highs. Once we peaked out, it took a while before we ended up with a spike of orange, where the green's crossing and you had the steel moving below with cyan above zero. Took place right about there. That produced fairly decent retrace, but then you ended up with another little pop right in between it. It did fill a couple of the, well, it didn't fill the big positive extreme, which was this one right here. So we knew that one was still to come. This one had already been taken care of, and so had these mid-range ones that took place right over there. So it was looking for this big one to get filled, and we ended up with the conglomerates right there, and then boom, that steel, the orange spike, steel breakdown, and there's that green coming from above down below, the one that I really like a lot because it's usually a strong signal. And early trader is going to take this one right here, which actually would be just the strong opening of that, obviously above the 13.5, boom, and then the initial target being obviously that first positive extreme, and then seeing where you are reading wise. And at that particular point, it was just getting started. There was nothing that was warning until right here, where that steel crosses above the red, kind of lets you know, hey, you could be at the beginning of an accumulation, and then it produced a little bit of a buy down at the bottom here, which wasn't able to sustain itself at all because you had the dip below the red line, so it needed to retrace the low, which it did. And then it produced a gold candle, which made new lows, and that's a difficulty here with that, because just because it did that, fine, it retested it, even though it stays gold, you can still get a buy signal within the gold setups without any problem. In this particular case, was a little rougher because as it started to climb, you get the dip below the green, and the orange below green but not below red, and then cyan. So you didn't expect this to last, and interestingly enough, it didn't. In fact, it came all the way back down to that point before it produced a legitimate solid buy, which happened right here. That filled in because you had the dip below the red line right there, so it came, and this magenta line that you're seeing here was just an old positive extreme that hadn't been filled. That took place all the way back over here at the start of the day, and we just kind of hovered around it, and then it built up support. And again, if you look at these, this really becomes a very interesting one from a long standpoint. Is you see that orange dips, if it comes right back up and crosses above the green, you've got to have green above cyan, or it's just not going to sustain itself. And in fact, it did. Came all the way back down to here before producing the final one, which really produced a much stronger. And you see how long this one is before it gets above the green? It doesn't cross above the green until right here, which is at the peak, which is where it finally fades a little bit before you get gold, and then the gold pushing obviously to the new highs. Do you know whether you're going to get that cross beforehand? Not necessarily, but you get a good indication of it when you get the dip of orange and a strong reaction of green moving higher. In this particular case, it helped too that you had cyan below red. You're not always going to get that, but that longer period of time it takes before the orange crosses above. In this particular case, produced a short snake right as it crossed, and that was good for backfill of the positive extremes all the way to this one. It still leaves the broader one, which you can just move that line up there at the 73. As we're at 85 right now, this was a previous one as well, no longer needed. In fact, I'll just get rid of it off the chart so we can look at it, open it up a little bit. And that's where we're currently at. We're going to expand this nicely that way. So this is something to keep in mind when you're looking at these for some of these reset longs. If you get that immediate spike back above, and particularly if you've got a steel that dips down dramatically, particularly if it's above the 7.5, then you're going to get some softness. Now, it's not a big deal if your, entry is at the 50% fine. All you did was retrace back to it. But it can be a precursor warning to keep you from holding on to something that isn't going to yield immediate results and wait for a secondary move, which also takes place on higher red pivot. And that's another one that's important to look at. You will get sometimes that big positive reaction when you get to these super oversolds, that minus 20 that I usually have the little line at here. And it produces that, but they don't have that sustained power. So keep that one in mind. And as always, I'll keep putting up the charts. As always, trade well.